Hey, sexy lady. Boom, boom, boom. That way, this way, that way. All right. Today, we are going to be talking. No, I messed it up. Today, we are going to be talking about if you guys got money and you know it. We're just going to be talking about investing. That's the only thing we're talking about. Because it's still Christmas break, and I'm just going to talk about investing. Bam, float on top of that bitch. Anyways, we're going to be talking about investing, how you can make money with your trading money. From stocks to crypto to whatever the hell you want to make it off of. If you're trying to make a bag, you can make, you can make 44% of the money you made, and bam, you're in business. Anyways, I'm just going to tell you guys how to make actual money trading and how traders that you see in the crypto system, or not the crypto system, the trading system, make all of their money and make so much more money. Because you could look at someone's earnings and they could only make, 200,000, 300,000 from trading for that entire year. But their investments, I bet you they're making way more money than that. And it is just through investing, knowing what the hell you're doing and understanding the markets and knowing where to put your money and where not to put your money. And all this video is going to do is talk about that. And yeah, I'm just getting the intro out of the way. I'll see you guys in the main part of the video. Boom.
What's up, boys? Now it is time for the real part of the video. Obviously, you guys saw the intro, and shit, I forget what I did for that intro. But anyways, Ethereum gave a call out in the Discord talking about Ethereum. I'm in it already, but it's gonna break structure on the daily, and the weekly is looking like this, as you guys can see. Here's what the weekly is looking like, and I am expecting price to go up to right here. So a 44% gain in probably 2-3 weeks. Hopefully I call that shit. If not, whatever. Anyways, ooh, a new week started. Move that right there. And yeah, so here's what Ethereum's looking like. I think it's a great buy right now if you guys do anything with crypto. And yeah, I think after it breaks structure on the daily time frame, it is gonna rip to the moon. And yeah, that's all I got for Ethereum. So let's get into the real part of this video, talking about investing. Oh shoot. Oh goodness. All right. Let's talk about this. Investing with trading reduces risk of losing What I mean by this is, if you guys knew this or not, you will actually lose all of your money if your broker goes bankrupt and is not regulated, and they will not have any insurance or anything, or after FDIC approved or whatever, to give you back your money. So I'm going to tell you guys how you should be handling that, stuff like that. And yeah, just my kind of thought process on this. And so say you have 100,000 in your trading account and you never invest it, never, I just sneezed, so I had to cut that part out. But say you never invest it and you have all the money you made from trading in your trading account, and say your broker goes bankrupt or something happens, something catastrophic happens, you're losing all of that money in your bank account or in your trading account. And I mean, that's just stupid. So I'm going to tell you guys how to invest, where to actually put your money. And the biggest thing I would do is say you have a 100K account. Say you have $100,000 account and you make 30%. So you make 30K. You should probably take out all of that 30,000 of your account. If you have a 100,000 account, if you have whatever. Say you make 30% in a month, in 2 months, whatever you do. You should take out all of that 30,000, invest it, and say the 100,000 is just all to your name. This is what you should do with that 100,000. You should probably put 75,000, 70 or 50 to 75K in a high yield savings, and have 25K in your have 25,000 in your trading account, but trade like it's a 100K account. Because in all realness, you do not need 100,000 in your account to trade like 100,000. As long as you have that money put aside, you don't need that in your account. Because it's like, say you lose money or something happens, the only thing you should be worried about is you should just be like, well, I can just take money out of my savings and put it into my account because I know my savings is insured. So if anything happens with my broker, I'm okay losing 25,000 compared to losing 100,000. And I'm not going to talk about this a lot. I'm actually going to get rid of this. But that's just one little snippet of what you guys should be doing compared to kind of what you guys are doing. I would say after every month, take out minimum 20% of your account, of your profits. If you're still trying to grow your account, say your account's only at $1,000, and say you make $100, say you make a 10% return for the month, you should take out, oh fuck, what is that? $20 of that $100. You should take out $20. I get it's $20, but you should take it out because it's the right thing to do. Not only that, it's the right thing to do. It's building habits so then you can do it in the future when you have higher amounts of money. May not be able to tell, but I just had to go do something. Anyways, what I was saying is how do I get these levels? And how do you invest your money? Because that's probably the hardest part. And all you want to do with cryptocurrency is look at the monthly and the weekly time frame. And I go off of levels. And you might have saw something similar with TJR. And I do follow partially with that. I'm not just going to discredit them and say this is my idea because it wasn't. So if TJR is watching this, I gave you a little bit of credit. And yeah, here's what I do. So as you guys can see, we have a monthly high right here, correct? So with crypto, what you want to do is just draw this monthly high and go like that. And you can make it as big or as small as you want. And you could say, oh, it matches with that one. And that is your level. And along with that, this could be another level. And this could be another level. It's whatever you want it to be. But if we go down to the weekly time frame on Ethereum, as you can see, we're in this level right now. We're respecting it. We're doing everything we should with this level. And yeah, like I'm literally just waiting for Ethereum to go all the way up here. I'm doing nothing else with Ethereum. I'm not trading it. I'm not doing anything. I'm just waiting for price to get up there. And guess what? If price goes lower, say price goes to this level, I'm going to buy some more. Because if price goes down here, I know that price is going to want to go up, hit all-time highs, and then I'm going to sell. This isn't a daily kind of thing. This isn't a weekly thing. This isn't a monthly. This is a yearly thing. This is how you invest and actually make money with like trading and stuff. So right here, if like with Bitcoin, right here, Bitcoin, there was a level right here, January 23rd. What happens? Hits this level right here. Cool. So it hits this old level from 2018, and it's 2022, about to be 2023. Right here, there's another level. And guess what happens? We go down to the weekly time frame, and all we do is look for a weekly break structure. Weekly broke structure. We can look for a break structure right here. Up, down. Another one. Up, down. Guess what? It breaks structure right here. We are longing right here. We're buying right there. And we aren't selling until we go all the way up to these all-time highs, because we know Bitcoin wants to, and not just Bitcoin, we know if you buy the right thing, it just wants to go to the highs, to all-time highs. You get a 300% gain in a little over a year with Bitcoin. Not even an altcoin, not a meme coin, with Bitcoin. Along with that, what happens? When do you sell? You can sell right when you hit all-time highs, or if you believe in Bitcoin, if you know it's going to go higher, stuff like that, sell when it breaks structure on the weekly time frame. So right here, all you're doing is looking for a weekly break of structure. So right here, you're waiting for this low to get broken. You're waiting for this low to get broken. You're waiting for this new low to get broken. You're waiting for this new low to get broken. It gets broken right here. As you guys can see, it gets broken right here. And you could have sold right there with a 267% gain. And if you were playing it right and you were playing it off of levels, you could have went like this and been like, okay, it's in a level. I'm going to trust that it's going to stay in these levels, and I know it's going to go higher. You simply could have done that. And it wouldn't be a terrible thing to do, but it's just like, it's however you would want to play it. And that's the tricky part because you could be up 300% with Bitcoin and be up 250. And you could get emotional and sell, and then bam, it rockets, and you'd be like, okay, I missed out on so much. And it's just kind of the way the game goes. You can do this on Solana too. I have levels drawn out on the monthly time frame right now. Look what it was in. Level. Wait for a weekly break of structure. You could have entered right here. You would have been in drawdown for a while. No stop loss because you're waiting until you hit all-time highs and bam. 52% gain. You would have been down. You would have had a crazy drawdown though. You would have had a crazy drawdown of 35%. So it probably wouldn't have been worth it for most people. But it's like you could have done that and it would have been okay. So if we look at the stocks I want, look what we have. I have Tesla. What do I have? I have monthly levels drawn out. And obviously you have to find the good companies, the good financials. But these are just well-known companies, and that's what I like about it because it's well-known. Guess what? There's a level right here. If it breaks structure on the weekly time frame, I'm going to enter. Guess what? If it goes down all the way over here, everyone's going to be selling because liquidity is going to get hit, but there's going to be me. I'm going to buy more, and then I'm going to get a huge gain compared to regular traders and regular investors that just get like an average of 10%. Whereas me, if I wait it out and say it goes all the way up, I get a 60% gain instead. And it's like, if we go to Apple, what happens with Apple? We have levels right here with Apple. And guess what happens? We are in these levels. You could have invested in Apple right here when it inverse that fair value gap. You could have invested in Apple and gotten a 12% gain just like that. And you could have gotten 12% gain in 35 days, in a little over a month. And it's like, or you could have waited. I'm trying to think right now. Never mind. Anyways, you could have just gotten a 12% gain. More than the average. A 10% gain is average. You could have gotten 12 and letting your money just work for you and you're not doing anything besides using your price action and using your knowledge to be like, okay, I know that price wants to go here and I'm just buying and dollar cost averaging, so when price does get there, I'm gonna make money. Right here, another level. Look what happens. Price goes down here in 2022. When everyone's selling, you're sitting here buying. You buy right here. You wait for it to hit all-time highs. And guess what? You're 35% gain. 35%. And it's like, you didn't do anything special. All you did was let your money work for you. You would have waited for this for 162 days. Like literally half a year, you would have waited for this. And you're making 35%. You're beating the market with money that instead of having in your trading account, not even putting it to good use, you're investing it and making a shit ton more money. Right here, look what happens at Amazon. Right here, we have level right here, right here. What do we have? We have a level right here. Cool. Break structure. Oh my god, we're in a huge downtrend? That's okay. Because what happens? We're going to show you every single spot that you would have bought at. So you would have gotten 17%. You would have been down insanely. But guess what? You could have been right here. And you would have been like, okay, it hit another level. You're waiting for a weekly break of structure. Bam. Right here. Entering. Again. Cool. Your dollar cost averaging. So your one is right here. Your second order is right here. And you're not selling until you're at all-time highs. So let's say right here, another level gets hit. It gets retraced into. Cool. What are you waiting for? You're waiting. Look at this. More levels. What are you doing? You're waiting for another weekly break of structure. We get an inverse of a fair value gap right here. Boom. More. You bought more. Look at this. You just bought 3 different times, getting a 92% gain, a 17% gain, and a 54% gain within the span of 2 years. Within 2 years, you are dollar cost averaging. So your average cost of the stock is going down, down, down. And when everyone else is panicking, selling their positions from up here and actually losing all the money that they invested in, you're waiting, knowing that price wants to go back up here and it's just going to take a little bit of time, but it's going to get back up there. And you're being patient. You're doing everything you have to be doing. And everyone else is panic selling, selling, selling. And you know that price wants to go back up there because it's good company, good stuff like that. And you're just dollar cost averaging and buying, buying, buying. And bam, it hits and you make all this money. This happens with gold. This happens with stocks. This happens with crypto. Like here, we can go with Microsoft. I have these all out on all my stocks. Every single one of them. Because guess what? It's the best thing to do. Because when everyone's selling, I'm going to be sitting there buying, buying, buying. Like here, look at Home Depot. It's a great fucking company. It's already at all-time highs. It is 11% away. But guess what? If it breaks on the weekly time frame, I'm going to enter and I'm going to make money. And it's like, it's not that difficult. It's just making money with the money you made instead of keeping your money at risk in your Trade Evade account. For me, it'd be my Trade Evade account. I'm instead putting my money elsewhere where it's somewhat safer than if it's in my trading account. And it's like, right here, we have JP Morgan. Look at their earnings. Hit, hit, hit. They missed 4 earnings, 5 earnings in the past 7 years. 5 earnings they missed. And I'll go over how to find a really good stock in the next video. But, I mean, you've got 5 earnings that were missed out of a lot more in the last 7 years. And it's like, if it hits right here, it's a level. If it breaks on the weekly, cool. I'm going to buy right here. And guess what? If it goes down, I'm going to be down probably a good amount of money, but that's where you manage your risk. You don't put as much money as you can at one time in, because you're just going to be panicking that you put way too much money in. That's why you should only have 20% of your income in stocks at maximum. not minimum. At max, you should have 20% of your net worth in stocks because that is a lot. And it just depends how risky you want to go. But say price goes down here. Say price goes down here. Goes down here. Cool, get a reaction. I'm going to buy. Boom, goes down here, get a reaction. I'm going to buy. What happens? Price goes down here. Cool, I'm going to buy. Goes back up. I'm going to buy. And it's like all these times where it went down and everyone's selling, selling, selling. Sure, I could be down 30%, but that's why I'm dollar cost averaging. Because, yes, I could be down 30%. I could very much be well down 30%. But at the same exact time, I'm only down 30%. I didn't lose 30%. Whereas everyone else is selling all of their positions, selling when it hits right here, selling when it hits right here. I'm going to buy and average my cost out so that I can just keep making more and more money. And you should be making your money. And say you have a bad investment, you should know when to cut it off. Like, it shouldn't just be by surprise that you're like, say if Amazon or JP Morgan, not Amazon, say if JP Morgan goes all the way down here, you're going to be like, okay, I'm going to sell my position. But you shouldn't be over risked, over leveraged into that singular stock. You should have multiple stocks, multiple cryptos, multiple everything to make you money and not just one thing making you money. Because if that's the case, you're doing it all wrong. Like right now with crypto, you should not be super leveraged in crypto. Like, yeah, you could be. And it depends how your risk tolerance is, but you shouldn't just be like, holy shit, I'm going to buy. Like, as much as I can. My whole bank account's in here. No, that's not following your risk. You need to follow your risk. You need to be careful. But you do need to invest your money so that you can make more money with your investments. Because that's what makes people rich. That's all I got for you guys. Thank you for watching. That was a lot. I'll catch you guys in the next video. Peace.